and welcome to Moneylife News and Views. I'm Debashis Basu. The US President Donald Trump is known to be unpredictable, but what he has unleashed since he became the president has shocked even hardened policymakers, businessmen, traders, investors, and bureaucrats. And he has 46 months still to go. I have been anticipating this for a while. Last October and early November, I wrote 3 articles pointing to a clear economic slowdown in India, which also indicated a weaker stock market. A 4th article in mid-November was titled More Dark Clouds Gather. Donald Trump had just become the president-elect, and I pointed out it would be suicidal to assume that his promised actions would get bogged down or tempered by realpolitik or Washington's swamp or the deep state. Even if a part of the Trumponomics is implemented, it will hit the rest of the world like a tidal wave from which major economies will not be spared. This is how it has turned out so far. After imposing punitive tariffs on Canada, Mexico, and China, America's top trading partners, his next targets are the European Union, Japan, South Korea, Taiwan, and of course, India. He keeps mentioning India as one of the worst offenders. India is a king of tariffs, he mentioned in his last term. Whatever one can understand of Mr. Trump's policy from a recursive stream of consciousness is combative, simplistic, unstable, nativist, and improvised. Any country that has large trade surplus with America, he believes, is cheating us. They need to pay a big tariff to sell to the US. Coming next from Trumpland are reciprocal tariffs, which will match item by item the duties that American exporters face. By one estimate, this would create 2.3 million individual levies. How serious are Trump's antics, and how will they affect us? For this, we have to turn to the intellectual basis for Trump's tantrums. And that comes from Stephen Moran, who is now the chief of the Council of Economic Advisors. His ideas are laid out in a 40-page paper which he wrote in November 2024. Moran suggests that Trump regime should aim for a weak dollar to boost exports, high tariffs to boost domestic manufacturing, and make other countries pay for holding US debt, or even make them swap 100-year debt for lower yield 100-year bonds. Now, if he's doing all of this, he's not doing it quietly. Trump has taken a wrecking ball to global trade linkages, and the impact will be devastating. The reason is this: it's just going to undo everything that has happened to the world over the last 70, 80 years. Economist Danny Roderick, who specializes in globalization, growth, and development, says, the world economy has achieved unprecedented levels of growth since the World War II. Nothing in history comes even close to this, not the Industrial Revolution and not the 19th century era of globalization. The basis for this remarkable growth is surging global trade between Asia, the US, the Europe, and regional trade within the Europe and Americas. And this was made possible by low transaction costs, including low tariffs. As East Asian countries like Japan, Taiwan, Korea, and Singapore started working hard to exploit the low-cost advantage, it was just after the Second World War, their exports to the developed countries surged. Later, in the 70s, China joined this gang of exporting nations, and over the course of 80s and 90s, took it to a completely different level, becoming the workshop to the world, especially after it joined the World Trade Organization in 2001. Next, exporters set up manufacturing bases near their markets. So China went to Mexico to serve the US market, or simply to exploit lower costs. So companies in China went to Vietnam or Thailand. Korean and Japanese companies went to Malaysia, and so on. Now, parallel to the surge in global trade, the post-war period also led to a rise in the US dollar as a global reserve currency. Almost half of global trade is invoiced in dollars today. And since a bulk of Asian exports went to the US, the trade surplus they generated was reinvested by the Asian countries in US government bonds, allowing the US to continue to issue more debt and financing its imports from these countries without distorting the exchange rate. This is called exceptional privilege or whatever you call it, but the US is unique in the world to be able to do this. Their fiscal deficit is haywire, their trade deficit is haywire, but they have dollar. And everybody wants dollar, and they can issue dollar bonds and finance whatever deficits that they want to. Hence, when Trump intends to uproot the current network of global trade linkages, the dollar will become extremely volatile, getting pushed upward by a variety of factors, such as tariffs, and downwards due to reduced growth from the same high tariffs. There will be many other push and pull factors. It's very hard to say whether the dollar is going to go down or go up. We just don't know. We'll have to see. At the moment, after Trump got elected, it started going up. And now when he's launched all these trade wars, the dollar has started to weaken. But that does not help us because Indian rupee continues to be very weak. A third factor adding to all this volatility is a stunning brawl that Trump has got into with every single country of the US, all its allies. It's fought with Europe, it's fought with Japan, it's fighting with everybody else. So the dollar's role as world's reserve asset actually allowed America all these years after the war to project its strength. And this is visible in many military bases across the world. And also it is invisibly apparent through its ability to impose crippling financial sanctions on rogue regimes. So only American can do that because it has the strength of dollar. Now, Trump has chosen to rip off the security cover that the US provided to countries from Japan to Europe, while openly siding with Russia last time. And Russia, remember, is part of an axis that includes China, North Korea, and Iran. In other words, Trump has so far intended to upend and destroy global trade, global investments, the dollar, US security cover, all at the same time. The consequences will be nothing short of catastrophic, especially for smaller and weaker nations such as India. The US is the most important market for India, as it is for many developing countries. India's exports to the US make up 9% of its total exports, and 18% of its merchandise exports go to the US. Tied closely to Trump's new trade policy is national security in all its forms. So Trump wants to achieve self-sufficiency in several critical sectors, one of them being pharmaceuticals. India exported more than $10 billion of pharmaceuticals to the US in 2023. Finally, India exported $50 billion of software services to the US in 2023, although the tech bros, as they call the friends of the group of people around Trump, such as Elon Musk and Mark Andreessen and David Sachs and all of them, they make up Trump's team. They are supportive of H-1B visa because they use a lot of bright Indian people, and H-1B visa allows Indian software engineers to work in the US, but Trump's core anti-immigrant supporters are not. So Trump will have to balance between these two people. These are India's two of biggest job-creating export sectors, pharmaceuticals and software. Now, if they're under threat, we don't know what's going to happen. That aside, the best of Indian companies are actually exporters because India does not offer a very large market for all kinds of products, especially manufacturing products. So, and these exporters, the best of them are exporting to the US because that's a very large market and a great market to be in. And they will all be under threat, and these are our best companies. Finally, there's now a looming threat of recession in the US itself if Trump's policies are all simultaneously implemented. One of the key policies is letting Elon Musk declare war on the US government spending. His Department of Government Efficiency has a target for cleaving about $2 trillion from the US budget. Even if he is partly successful, the US may tip into recession. After all, it is spending by the US government that has been behind the strong US growth over the last few years. And the government job additions accounted for nearly 25% of total non-farm payroll additions in the last 1 year versus a norm of 5 to 6%. Similarly, government spending is about 4% of GDP, higher than pre-pandemic. Now, if the US gets into recession, Indian exports, including software exports, will suffer even more. All put together, unless something changes, Trump's policies are a huge threat right now, which perhaps is not being recognized fully. We need to track this. Nobody knows where this is headed. I don't want to be overly pessimistic, but this is the picture today. And of course, we'll have to track it very closely to see whether he's really serious, whether all of these things do get played out, or just a negotiating tactic, and we go back to where we were, at least partly. If you liked what you heard, please do share and do subscribe to this channel. Thanks for watching.